Good evening. This is Ken Long at Tortoise Capital with a review of the daily trading report for October 17th, 2016. Market's still bullish normal, in the middle of neutral for the annual, but near the very low end of neutral for the 10-day look back period. You can see we're right on the boundary of oversold conditions. ADX is continuing to strengthen. We now have we're very near getting a bullish or a bearish trend. As you can see, the bears are in charge, and the strength of trending is increasing. Volatility is at a long-term normal. We have channeling and overreaction signals today, and the usuals in IWM and EFA for overreaction and IWM for channeling. Plenty of channeling and overreactions in the extended set to look at. 5DDs in small caps, energy, a 551W in WPP, and then a long list of quality auto framers that test out well on a 10-day basis. The volatility index, the risk index, is still showing a favorable short side intraday move is available. Again, plenty of dojis, lots of real good auto framer setups you'll see on the auto framer chart. And then 5DDs in AXP, Pfizer, JP Morgan. What's nice especially about American Express and Pfizer is that their RSI2 is so low, and they're well oversold and very favorable here on the auto framer. They've been in painful conditions here for 10 days and 1 month, and in the case of Pfizer, 3 months. So there's some quality on discount there, and so we'd expect potential nice follow through on this on a swing basis as well as an intraday. ETF 30 again, half the stack, better than 2 to 1 on the auto framer. Lots of patterns to choose from. Treasuries were big today. We talked about that on the weekend report as an opportunity. And that followed through. Metals and mining are good today. Brazil and Latin America continue to dominate in every time period. I still think that's the short-term parking place while U.S. markets are waiting for the political fallout to occur. And Brazil, Latin America are not Europe, and they're not Asia, so and yet they're broad enough to absorb money, and that's what I think is happening. In the auto framer, lots of great setups to choose from, and you can see all of the reward to risk ratios and the key price levels for framing. And then in the regression line fractal framework, top shelf, these are value plays, the most number of ATRs below their own long-term fair values, so Verizon, GE, Coke, Walmart. Then in the red, these are the ones that are overheated, the most ATRs beyond their own fair value, and then that would make these long-term relative strength leaders. And so Apple, Intel, Boeing, JP Morgan, and Caterpillar. So all of these offer exceptional opportunities in both directions because they are at the extremes of their populations. The daily squeezes, a lot to choose from here as well. These are the ones that had a relatively narrow range today and yet have a large enough range staff that if you get a move outside of yesterday's range, that a range stat move is very favorable. In other words, the range stat would give you 3.5 to 1 reward against a daily range risk here in VXX and XIB. Notice that the S&P, Treasuries, technology, silver, all the big indexes are had a range compression day today, so postured for a large breakout on Tuesday. Coming down here to test the support level at 212. The last time there was a nice rebound, and so if this doesn't hold, then a collapse the size of this magnitude, a $4 move down, is certainly within range. Nothing special in the slope. It's right at the long-term normal, and just hovering, waiting for politics to resolve. You can see on a percent stretch relative to the 200-day moving average, testing this aging bull, and the last time we saw one of those tests like this, there was a nice bounce up, followed by a sharp downward move. So this sideways quiet channel here is getting ready to resolve itself in one direction or another. And that's everything I want to cover on the daily today. And let's take a look at some charts of interest. This is a 5-minute series of pocket trades in Brazil. So we let the morning noise sort itself out. We get a 1, 2, 3 entry and a pocket entry with the RL10 crossing the VWAP and the dragon and the baby dragon. And so with a risk of about 20 cents down here at Z minus 2, you buy it, get a nice move up, riding the Z3, and 1, 2, 3 exit here as the RL10 crosses the baby dragon for 1R. Now playing an owl short, fails, and here's the RLXD exit, so fractional loss. Stop and reverse because now we have an owl on the a pocket on the long side, excuse me, with an entry over here about 36.30. We get a hesitation, a second pocket entry, felt good at 36.47. An excursion out just beyond Z2, then a 1, 2, 3 exit with the RL10 crossing the baby dragon, cashing, stop and reverse on an owl, now an owl short. I gave back too much here. This was a Z3 excursion. This should have been cashed sooner. And then that sets up a P7 potential that was a Z3, then buy Z minus 2 with a target of the Bollinger Band. I mean, there were some opportunities in here that I just wasn't prepared for. So that's a pretty good series in Brazil. I'm liking the 5-minute charts. Here's a series in EWW Mexico. So again, we wait to 30 minutes for a quick frog, essentially. And then a 1, 2, 3 entry. I consider this a pocket with a stop below the swing low. Not much risk there, maybe 20 cents. Nice orderly move. 1, 2, 3. RLXD, just entering the dragon cash at 50.60. So that's about 1R again. Owl short. We have a unambiguous move. RLCO outside the river. RL10 crosses the dragon. The dragon is sloping down. 30 is sloping down. This is short with a stop at above the RL10, and then nothing cash. Then I like this as a pocket continuation of this earlier strength, but nothing, and then it just kind of drones on for the rest of the day. Nothing else there. Here's one from the chat room from Jeff. Here's a hybrid frog box setup. Maybe a little slow to enter, but that's all right. I like the move, pull back to the dragon, resumption, 1, 2, 3 entry. I consider that a pocket continuation, and he gets about that's just about and R would be the edge of the dark green shade, so he cashes 0.86, and he's marking up his chart. Maybe this is a better exit, a fractional improvement. Still, I don't mind capturing 0.86. That's better than the average win, and so I don't mind that profit capture at all. Here's one from Sonal. This is a hybrid frog frame. Buys long with a stop here. You can see that's just an orderly move to here. I really like the cash. I really love the re-entry and taking segments. That's 2 legs up, and she was reluctant to take this one. Didn't have the will, but still 2 legs up. That's pretty nice work right there. Well Here's one where I want you to just notice the power of the hybrid frog. This is one that wasn't taken but could have been, and if that's an R, I just respect that he's able to find the hook and take the trade that he frames. There were other things going on this morning, but just to notice the power of the hybrid frog, and when this support level from the previous close breaks, you get this nice big move down as all of the stop losses are taken. So there's a gap up, and people are playing this for the long side, and they could put their stop below here. When all those stops get hit, that's where you get this sharp move down, and then rebound. And then when this collapses the second time, this is really the outstanding entry here. Cash, and then short again. That probably would have fizzled out, but there's a couple opportunities for moves in here, all based off this hybrid frog frame. But now you can see the unambiguous move, RLCO outside the river, and now we're waiting for that 30 to roll over. So you have the RL10 across the river, across the dragon, excuse me. Now the dragon is up, the 30 is up, RLXD, 1, 2, 3 entry, perfectly played. I don't mind this as a re-entry here either, by the way. It's a nice little pocket re-entry. But very well framed and executed in a disciplined part of the curve in that morning hook. Well done. Here's one from Charles with a P1F pocket. So there was a P1. It failed. It failed to come back to here. And so now the resumption says, I expect a move on this leg as large as this move. And what do you know? You get it. So you get an entry, stop just below the Bollinger Band mean, RLCO outside the river, bam. There you are for 0.44. And then potential for a owl coming the other way. Here's one, a hybrid frog short that scratched out in here and then re-entered here for a nice resumption. Well done. This was a potential for 2R in here. This is one from Charles on Disney that nets out to 0, even though there's a losing trade here on I like this entry here after a RLXD, and this thing could be taken off, but it rejects. Very nice capital preservation on the RLXD. And now getting short, but nothing there. Capital preservation, getting short, cashing. And so although this nets out to 0, that's really with 2 trades that didn't fire and 1 that paid. So very well played, very well disciplined on the exits. And all we had to see was this thing run a little bit, and we'd have been fine. So to wrap it up where I see us today, still in this 70 or 80 day long sideways quiet channel, but the 10 is sloping down. It's at the bottom of the river. The 30 is now rolled over, testing this very crucial support level. If this collapses, then we at least get to Z3 at 209, and then really to 206 in a hurry, which is the top of the dragon hump over here. And then the next stop after that is the 200-day moving average. So there's potential for another sharp shock, just like we're seeing here. On the upside, a rebound off the Z -1 gets us to the Bollinger Band mean at 215, and then testing the top of this channel at 219. That's all within a channel trade kind of framework. So still waiting for political resolution, and so the intraday trade to me is much more interesting and reasonable to frame. So it's Ken Law from Tortoise Capital. Keep your risk measured and your powder dry.